Welcome back to the Shared Practices podcast. I'm Caitlin Embree, and I'm really excited that I have with me today Morgan Hamon with EAG Dental Advisors. Good morning.
Good morning. Thanks for having me.
Thank you so much for coming on. George recently did an episode around CPAs and where they really shine and where we need them in practice management. And also kind of how the practice management consultant can work together with a CPA to help our audience and our clients achieve their goals. So I think it's perfect timing to have you join us. Can you start
Great.
by just, telling us a little bit about how EAG came to be and maybe like what niche you were hoping to solve for in the dental industry?
I'll quickly tell that story, and it goes back to 2010. Prior to being a CPA, I was a Navy pilot, and when I was done with that career, it was time to switch gears. My dad was a career CPA, and we were both needing something to do. So I went back to school, got a master's in accounting, sat for the CPA exam, and we did essentially a startup, and we envisioned a very high tech, high touch niche CPA firm, business oriented. We wanted to work with small business. And just very quickly, we were fortunate enough to find our way into the dental space. So by 2011, we were all in on private dental exclusively, and we never looked back. And our mission with our clients was really three things. A lot of accountants tend to be very tax oriented. So if you look up if you're just Google CPA, I'm a dentist, I have a dental practice. Most CPAs are going to want to do a tax return for you. That's important, but that's not why we start practices. That's not why you go start a dental practice or start any business. We've always looked at this about the other way around. First and foremost, you have to have financial records for that tax return. So why don't we use those along the way to make a nice living, right? To make that living that the dentist has in mind when they start or purchase a dental practice. And so that's what we set out to do. We do the monthly accounting for all of our clients. So we do the bookkeeping start to finish every month for every client. Now, the dentist still controls the practice. I like to say we count the money, but we don't touch the money.
Right.
So we follow behind, make sure those books are up to date every month. And then we pull the data out of the books into a reporting software and generate a report that the clients can actually read. I call it a practice profitability analysis. And it's a dashboard style report. They can make sense of it, just very quickly understand the key metrics that are impacting profitability. The whole idea here is to, you know, allow them to be more proactive to make that living they have in mind to achieve that appropriate financial reward for owning a dental practice. We want to help them along the way. And then, of course, help with proper tax avoidance, getting the tax returns done. And so we refined that process over the years. That's been our business model from the very beginning. It's true to this day. Now, about a year and a half ago, we made a change and we combined with EisnerAmper. Now, my dad, he was at a point where he needed to retire. And so myself and my long-term business partner, Courtney Cooperthwaite, who's our tax partner, we had a decision to make. Do we try and replace Ken, or do we partner with a world-class firm that has a lot of resources that we don't, and combine forces and move forward? And so that's the route we chose and why we combined with EisnerAmper. So we're organized as EAG, that's Eisner Advisory Group Dental Advisors. And key in that decision, I had a couple key requirements. One, I want to stay in charge, and I want to keep doing what we do. All right. I wanted to partner somebody that valued what we do, and they actually wanted to add resources and just help us do this bigger and better, not fundamentally change it. And we shared that vision with EisnerAmper. So it's been wonderful, and they've added a lot of resources. There's a lot of other work we can do now that before we had to send elsewhere. And so our mission remains the same: help our dentists make a nice living, help them be proactive, help them get those tax returns done, and help them save a lot of money on tax along the way. And do that with a high-tech, high-touch firm that's very hands-on. So that's probably the very long answer to your question there on where we came to be. but that's us, and we're having a great time and look forward to many more years.
Well, and I can speak to firsthand, your dashboard view and what those
Mhm.
financial statements look like coming from your company, because I've had many clients over the years work with you, and I'll have them send me their financial statements every 6 to 12 months, just so I
Mhm.
can get a pulse on things. I mean, I view this as we're both sitting on the team of the
Right.
doctor, right? And you're kinda coming from the financial side, and I'm coming from more of the operational team dynamics, leadership side. But we all want the same thing, which is to make these doctors profitable. And from my side, I wanna make sure it's super sustainable for them, and it's a simple way to run a business long term. And so the financial documents are so important in my coaching and that I'm consulting those. And so when I have seen copies of what you produce, it is so much more intuitive and easy for both of us to read. I look at just a basic profit and loss statement out of QuickBooks or what have you. And I understand it now after these years of practice and analyzing. But most dentists will say to me, like, I don't know what I'm looking at. And so the context that you're able to provide and show them, with the graphs and, hey, here's what an average practice does. Here's what our clients tend to do. Here's where you fall. It really sets the stage for them to at least have some sort of idea of the basics of what's going on. So, when they join with their CPA to actually go over this, I think the conversation can be a little bit more nuanced at that point because the basics are laid out. So I really appreciate that from my end and I've seen a great product.
Oh, that is wonderful feedback for us. That's exactly what we're trying to do. And I wrote that report, gosh, 12 years ago, and continued to enhance it over time. And I think just not starting my career as a CPA helped me with that because
Mhm.
I remember being an employee
Yes.
and you get your paycheck and you just see all this, items coming out. It's a bit of a mystery, and you get left with your net pay that you plan your life around, and all of it wasn't certainly not intuitive. And then you get into the financial statements, and if you're not a CPA, if you're not a trained accountant, they they're not intuitive. And I think where a lot of dentists, if all they get is raw financial statements from their accountant, sometimes what they don't fully understand is that there's not just one statement that tells you the whole story. There's the income statement or profit and loss and the balance sheet. And honestly, the balance sheet's more important, and it is not intuitive at all. And I don't even want to show them a statement of cash flows, but they all three relate to one another. And if they're given that package, 100% probability they're going to gravitate towards the P&L because that's the one you can make the most sense of, right? It's just what income less expenses is net income profit, but it's missing a lot of things that the dentists don't fully understand. Things like debt service, equipment additions, profit distributions, like those are all over on the balance sheet, but they have a very material impact on cash flow.
Mhm.
And so with our report, we're able to blend a lot of that data, right? So in the background, what they don't see is we're pulling items off of those statements, and then we can arrange it in a much more readable format. So very, very good feedback from you because I view our roles as very symbiotic. I like to say, we can diagnose low profit. Like if a profit margin is low, we can not only provide context for the clients because we support over 1,000 private practices coast to coast, and that's our client average. So we know exactly what's happened with everyone else. We can give them context. But I like to say, we can diagnose, but we can't operate. Right?
Right,
So we can find you can operate.
right.
So like does we it's very much a partnership.
Mhm, and it's great when they're able to say either, "My CPA told me this is a problem, I agree, do you agree? Here's the paperwork to back that up, here's the numbers," and we can solve for that. So one of the biggest topics around CPAs in our coaching and on our podcast and kind of with our philosophy is finding that line between financial advice and helping
Mhm.
on, everything with overhead and where the CPA does really well. And
Mhm.
then also being able to be flexible and understand that certain clients are coming to us wanting to grow. And
Okay.
so what we often say is your CPA is so important for X, Y, and Z, right? All of these things
Hmm.
related to tax and embezzlement and reconciliation and making sure that your ratios are in line, right? But of course,
Hmm.
there's nuance to that and there's context. And so, with a lot of our clients coming to us earlier on in their career, the conversation around profitability looks different versus some of the
Hmm.
clients that may come to us halfway through or towards the end. For them, it's pretty straightforward. They want their financial documents to be right there with industry standard. They want their practice to be as profitable as possible, look good on paper so that it can eventually sell, is the bottom line. So how about those clients that are earlier on in ownership and they have big dreams and big visions, and sometimes that means staff overhead is higher than the CPA would like, or, whatever the case may be, marketing expense is maybe through the roof, compared to what the other thousands of clients are doing. How do you guys kinda meet that need and blend that nuance together?
Sure. And we've over the years we've worked with literally hundreds of startups, hundreds of first time buyers, a big part of our business. And of course we have the clients that they're very seasoned, had their practice 20 years. I think anytime, we interact with our clients to talk about profitability, that the first thing I do is try and help that doctor set the goalposts for profit margin. If it's a startup and they're at month 3, hopefully they're breaking even, but there's not going to be a profit margin, and that's okay. And so a lot of times it requires a conversation with the doctor to understand kind of where they are in the business life cycle, but then also understand the composition of their business. Because if we take, for example, an established practice that has, one or two full-time associates that produce well, the goalpost for their profit margin is going to be a lot different than a solo doc office. So we have to understand a bit about the business to set the goalposts on profit margin. Once we set the goalpost, then we can diagnose, right? And if profit's great, and I like to say there's no such thing as too much profit,
Right.
but it's definitely an issue if the profit margin isn't there. And then if the profit margin isn't there, that's when we'll explain why. And there's a couple levers to pull for profit again from the accountant side, and those will absolutely bleed over into the operational side, into your lane. If we just look at the math for just like, okay, profit is low, and again, this is applicable for any stage of the business life cycle, right? So if it's a startup and they're collecting, 35-40,000 a month, and they've got a 15% profit margin, well, 15% doesn't sound great, but we're likely telling them congratulations, right? We're getting there. If it's an established practice collecting 1.2 million and it's one doctor and it's 15%, then there's a full-blown emergency, right? So we just have to, the numbers themselves don't, it doesn't, it's not a direct correlation to the diagnosis. We have to understand where they are. And ultimately what we want to do is not just tell them, yeah, that's low. We want to have some action items. Okay, let's really dial in. And I will tell you, and you can share with me because I don't interact with a lot of other CPAs. We know how we do it. I think that if profit margin is low, I think the go-to diagnosis, the go-to reason is, well, my overhead must be high. Where am I overspending? That's 100% where most dentists are going to go right away.
Right.
I think it's likely that a lot of these tax-oriented CPAs are also going to go there because that's all they see. And and the reason for that is not that these CPAs, aren't good CPAs. It's just if the CPA is primarily engaged just to do a tax return, all of our clients, right, these private dental practice owners, they own pass-through entities. And what that means is the financial statements are kept on an income tax cash basis. So all the income ties to the bank accounts and the credit card and the payroll reports, the AR, right, the production, all that data that resides in the practice management software has nothing to do with any of the books. So when we're looking at diagnosing low profit, yes, we do need to look at overhead, but we also need to look on the revenue side of that profit equation. And I think a lot of dentists miss that because they're very fixated on overhead. And I think a lot of accountants miss that as well because they never see an AR report. They never ask for it because they don't need it for a tax return. We ask to see the AR aging report every month for our clients, not because we're putting that into the books or it goes into taxes, because it doesn't. It goes on our management report as a diagnostic. On profit, we can be overspending, we could be under collecting or underproducing. Right. And so we have to know which one that is to give the doctor a meaningful action item, because let's face it, they only have so much time to be the CEO of their practice and do everything else that needs done.
Right.
So we want to give them some defined action items so that in that very valuable time they have to be CEO, they're actually working on the right thing. So that's again a very long answer to your question on kind of where how we identify the life cycle, set the goalpost for profit margin, and then assess.
Well, we're really aligned on that, and that's why we're partnered, I think, because you're right. It's sometimes very much a defensive lens in which both the CPA and therefore their clients as the dental practice owners are looking at the profit, and it can be this scarcity mindset that I always try to steer my clients away from. And so often when profitability will come up and I'll say, okay, let's gather the reports. I would like to do my own overhead analysis and look at it through my lens, because the profit and loss statement is very tax friendly and it looks pretty, but I want to put it into my practice management lens and see what levers need to be pulled. And I will always say, we might find stuff to cut. Sure. I might be able to look at this and go, yeah, my other clients get this for cheaper, or yeah, you're overspending on supplies every month, or, maybe I'll find some things where you can do some housekeeping, but I want to set proper expectations. My recommendation almost always is going to be at the top of the line.
Mhm,
It's going to be that top line revenue.
mhm.
And you can't collect what you don't produce. So we look at production, and then you can't produce what you don't gain case acceptance on. So we look at treatment
Mhm.
presentation, and you can't present treatment on what you don't diagnose. So then we go backwards and we look at diagnosis, and you can't diagnose without patients in the chair. So then we look at marketing, right? So I roll it all the way back, but it kind of starts at the end with the documentation that you provide.
Yes. No, I totally agree with that. I would say one area where we focus in on, because everything you just mentioned or several items you just mentioned are definitely out of our lane. Like I'm not going to be
Right.
talking with the doctor about case acceptance because that's just not my world. But they do need to collect what they produce, and that's where we see a lot of clients have challenges because they've delegated that likely to a staff member. The doctor's busy. They might not even understand that process.
Correct.
They're
Often
just
often they
they
don't. That's not
they're
what they
just
learn in
hoping,
dental school, of course.
right? And they're
Yeah,
hoping it's happening.
yeah.
And if it isn't happening, and they're not really, and that'll manifest in the AR aging, the canary in the coal mine, as I think of it.
Mhm.
That can just fly under the radar. And if they're not getting financial statements and they're just managing their practice by logging into the bank and seeing how much money they have, and they're feeling that cash flow pinch caused by collection issues, and they're like, well, I'm going to go beat up my supply rep because I must be just paying too
Right,
much money. So that's what I think you and I combined, or we're trying to avoid, is there's only so much you can cut.
right,
You have to produce. You have to analyze fees every year. You have to make sure you're charging enough,
right,
charging appropriate.
right,
Also gets out of our lane a little bit. I
right,
don't know if they should be charging
right.
for a crown in their area, but it better be top of market, whatever that is, right? And then I went to a business seminar, gosh, years ago, a long time ago. And you know how those seminars are. You might leave, and there's a couple, two, three key
Golden
things you
nuggets, yeah, yeah.
yeah, and one of them was, look, when you own a business, and it doesn't matter what business it is, you have to charge, bill, and collect, and 2 out of 3 doesn't cut
I
it.
love that. Very
You got
simple.
you
Yeah,
gotta collect money. And that's where we see, I think, a significant amount of
right.
challenges is when there's breakdowns in the collection process.
Mhm. Absolutely, and that's where I love kinda thinking of us as sitting on the same team, because There are times where questions come up related to adjustments and reconciliation and tax related issues. Embezzlement concerns are very common, of course. And so those are areas where I get to very confidently say, you need to reach out to your CPA and have that conversation. It's important for you to meet with them quarterly or, whatever the case may be for their business. And then on the flip side, hopefully you all feel like you can refer to a group of trusted consultants to say, like, there's probably an issue here in either the charge bill collect cycle. I can't tell you exactly which one is the worst, and I can't tell you how to fix it, but here's a few different options for those who can operationally, and so we have to come together in that way, um, you mentioned cash, and I have a question for you related to cash flow after this too.
No, the analogy I think of is, like, we're kind of like the radiologist. We can look at the imagery,
Yeah,
we can diagnose,
yeah,
but again, I can't operate. I have to give that to you
yeah, yeah.
to operate. If the problem is, there, because we will get into talk. If we're diagnosing like staff costs, for example,
Mhm.
and they're high. One of the things we'll look at is, okay, what's your multiple on hygiene?
Right.
In my opinion, they need to be, hygienists should be producing 3 times their cost in net collectible production. If it's 2x or less, okay, that's a problem. I can't fix it. I don't know how to coach a hygienist. I don't know how to
Mhm.
schedule a hygienist. And
Mhm.
that's a great handoff where, for that trusted consultant that actually can go in and fix those operational issues, whether that's additional training, instruction,
Mhm.
coaching, or whatever that is.
Where does that 3x come from?
So the 3x, that's a very, for any service business, it's a very simple rule of thumb, that golden nugget, if you will. It's the rule of threes. So whether you're an accounting firm, law practice, dental practice, generally it is when you employ people, okay, you got 1/3 labor, 1/3 overhead, 1/3 profit, reasonable profit, right? And that's true. And just, like, for example, that's validated for a single doctor owner operated dental practice. Our average profit margin is 35%, right? Okay, roughly a third. So that's reality. Of course, you and I, we would love to see our clients exceed that. And we do have many, many clients that get up in the
Of
40
course.
to 50% profit margin. But it's that rule of threes, right? So for hygienists, they need to produce 3 times what they are paid. 1/3 of that goes to their pay, 1/3 of it goes to overhead, 1/3 of that goes to a reasonable profit for the owner,
Mhm.
right? And they need to be producing that 3x. Now, and we actually have that on our report, right? If the doctor has departmental payroll reporting, that's really important, right? They have to have that activated in their payroll service, where they can designate, okay, these are my admin staff, these are my dental assistants, these are my hygienists. We can isolate the total hygiene cost. We'll actually give them their 3x multiple every month. And if we're diagnosing, say staff costs are high, and we're trying to figure out why, like, that's the first place I'll look. And it's real easy to see, because if we say, all right, the cost in your office to pay your hygienist is X amount, 3 times that is a dollar amount, and then I go up to top line revenue and I see that 3x hygiene is like what half a month's collection is. Well, you and I both know hygiene's probably not kicking in half.
Right. Rarely
So
ever, yeah.
So right there, we can say you're not at 3x, right? And I'm surprised at how many times I visit with doctors, and we'll be walking through this conversation. I'll say, well, do you know your multiple on your hygienist?
Mhm.
No.
No. Yeah.
I say, well, let's do it.
Yeah,
what, does
yeah.
your,
Let's
what
see
does
what
your hygienist make per hour? Tell me. You have to approximate some employer paid payroll taxes, because this
Mhm.
is meaningful. And that's about 8.5%, if you're curious. So if they, whatever they make times 1.085, that's your cost. If you want to add some benefits, you can do that as well, but then times three. And that's a very useful exercise to go through. We could very quickly get into a side topic here about how expensive hygienists
We
are
sure
and
could.
reimbursement rates and
Yeah.
that. But it's a tough problem to solve. But it's also important to know what that is, because if staff costs are high, and the doctor feels at a gut level like, "Oh, damn it, I just don't know how I could do it with less folks."
Mhm.
Yeah, you don't really want to give someone a pink slip when it's the issue is maybe in hygiene, maybe it's scheduling, maybe there's other factors.
Yep. And this is where I wanna add a little bit of context for our audience, because I think this is a prime example of where both opinions matter and both lenses matter, and so I wholeheartedly agree with everything you just said. The context I'll add is that that is the perfect solution to give an established practice who is asking you to solve for high staff costs, high staff
Mhm.
overhead. How do I
Yeah.
balance this out? You are providing that solution. What I want
Mhm.
our audience to keep in mind is if you are in growth mode and you are spending X amount of dollars on marketing and you're looking at your schedule and you maybe need more openings in hygiene to allow for new patients to come in quickly to make those marketing dollars make sense and actually convert, that may
Mhm.
mean that you're okay opening up an additional day of hygiene in your week, paying that hygienist X amount per hour, and you might be okay between you and your practice management coach. You might be okay with breaking even on that hygienist
Mhm.
every day.
Mhm.
And so you need to have the stomach lining to meet with your CPA and understand they're going to be very correct in telling you from a profitability lens, from the business perspective, 3x is what you need to go for, but you have to have that gut and that kind of business eye on your own business and make your own decisions and kind of know what are you striving for, because if you only take this advice in the context of what you're advising, it can be that scarcity mindset of like, well, my CPA is really happy because my staff overhead is 25%, so I'm happy. It's like, well, okay,
Mhm.
congratulations. Now what though? Because you can't get a new patient in for 6 months and you're
Mhm.
also over here spending on marketing without being able to accommodate that. So, I just wanna add that because I know
No,
my
I
clients are gonna go,
agree.
"You went on this podcast and you heard him say
Uh,
it should be 3x," and so that's the context
well,
I'll
let's
add.
this is a good topic. Let's continue on this for 1 second because I'm 100% in agreement with you. And I tell our doctors, particularly our newer practice owners, okay, they've not owned a business before. Your business can grow. Like there's some up and down. We see it, right? The collections there's up and down every month, but there's some trend growth, right? That can be hopefully linear, hopefully up. Staff costs are not linear. Staff costs go in big stair steps. And so and it'll almost never be perfect. So if we consider like your example, right? So we got like the perfect numbers, but we are at a growth mindset. So we got to open up some schedule. So we're going to add a hygienist. So now all of a sudden we're overstaffed. Our numbers are going to be high and we're going to grow, right? We're going to grow into that staff cost. So we're going to go from high staff costs. We do all the things you recommend for marketing, scheduling. We're going to grow, and then staff costs are going to look perfect again, right? But then we're going to keep growing. We have to say now, oh, we're understaffed. Okay, we need to open some more columns. Let's get another hygienist. Now we're back. We're back to being overstaffed, and then we have to grow. It'll feel perfect for a little while. Keep growing. Okay, now we're under. So it's a cycle. It's stair steps. It doesn't match. So you will sort of vacillate between being
Mhm.
overstaffed, understaffed, and as business owners, I like to tell our doctors, look, HR is the project that's never done.
I love it.
It
I
doesn't
agree.
matter.
Yep.
It's never complete ever. Not even for me.
Yeah.
Like today, I was guaranteed. I'm looking at staffing.
Right.
The other thing I'll tag on to there is I say, for our doctors, you got to zoom out a little bit. Okay, what is the overall profit margin? What does your life look like? What does your income look like? And I'll tell a story here. A longtime client we have out in Hawaii, very experienced operator, very successful dentist. His hygiene multiple is 2 times. It just is. We've gone through the exercise. He's gone through it. He's very savvy. He says, Morgan, I don't care.
I love it.
I live on an island. There's only so many hygienists. They're all very well paid. He has a very good profit margin, has very nice income, and he tells me, Morgan, look, the multiple's not there, but my hygienists are so good. They keep my column full.
Mhm.
They are in there pre-diagnosing, treating. That's a service to the patient. They need that treatment. By the time
That's the nuance.
he gets in there,
Yep.
it's a done deal. He said they keep me busy.
It's that
And
value of the hygiene appointment goes
yes,
beyond just the fees that are getting posted to the
exactly.
ledger. Yes.
So I never draw just hard red lines on any kind of, benchmark, if you will.
Mhm.
I said we have to zoom out. Like, we have clients where the staff costs is, maybe their non-doctor staff costs is like 32%. You mentioned 25 earlier. That would be ideal. I must share with you our client average about 28.
Mhm.
And that just and that's just what everybody is. Let's just say it's 32. But they still have a 43% profit margin. Like, that's pretty
Yes.
good.
Yeah.
And the doctor says, I've got a great team. I come to work, everybody gets along, stuff
Mhm.
happens. Is success, is it all money?
That's right.
Is the owner? Or is it a little money, quality of life, and time?
And that's where I go, what do you want? I'm here to help you achieve your vision. And sometimes the client is more interested in the simple and the sustainable part of my philosophy and less on the profitability. Profit's important, but I've had clients tell me, I don't want to make more money next year. I want my life to be more simple. I want to hire an office manager. I want to hire an associate. And that's where, I mean, I think this conversation is so important for dentists to hear and maybe their office managers to hear too, to add some context for them. But you see how you and I mean, we're looking at things from slightly different lenses and we're agreeing with each other. And I think a key takeaway from this episode is as the practice owner, you have to know yourself and your vision and what you want, and then put together a team of trusted advisors that you can be honest with and push back on and ask questions of, and ultimately feel like you're equipped to make your decision.
Absolutely. Yeah. Because success for one doctor is not success for the other. It's not always more money, it's not always bigger office. So, just like you said, sometimes they want to stay put. And that's its own challenge, right? Because you and I both know, like, businesses aren't static. You're either growing or shrinking, right? And so that's a separate topic on, okay, how do you sustain? You're going to have some natural patient attrition. How do you sustain that? But you're exactly right. It's not always just more money. Sometimes it's
Mhm.
more time, work life balance, or just coming into work and I've got a great team and I
Mhm.
just enjoy my life more because I'm not putting out
That's
fires all
right.
the time.
That's
So
right.
I always zoom out. How 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 do we feel about the whole thing,
Mhm.
and then we can dive into some action items that are a little more targeted on what the doctor actually wants.
Yep, and let's shift gears a little bit here into cash flow and savings, and I wanna ask you a question that I get a lot from dentists, which is how much cash savings should we be keeping in our business account? I feel like that's a hot question, and I kinda wanna get your take on it.
The truth is that there's no wrong answer. It comes down to what the doctor's comfort zone is in terms of having a cash buffer. And so if we think about why do we need a cash reserve? Well, a couple reasons. Businesses run on money. We can't run out, but we also want some level of comfort that we can just pay bills as they come in and we don't have to stress about managing that cash too much. So if the Shine bill comes in the same week as payroll's due and we got the rent, you can just pay the bills and not have to stress about whether we have money or not to pay those. So for a place to start, what we advise is let's take a look at the break even point for the practice. And we quantify the break even point as all the operating expenses. So just what you need to pay to keep the doors open. Pay the folks, pay the rent, pay the bills, operating costs, not the doctor, okay, but just your employees. This would also include an associate doctor if you had an associate doctor, but pay everybody and be open. We also must include the debt service. So if you have financials and all you receive is a profit and loss, you can't just go look at total expenses because we must include your debt service obligation. And the debt service obligation is actually recorded over on the balance sheet. Every time you make a payment, that big note just gets a little smaller. So on our report, we do that math for the client. We say, okay, this is your break even point for the month. This is paying all the operating expenses plus the debt service. So if your practice loan payment is $7,000 a month and 5,000 of that is principal and 2,000 is interest, we're going to add 5,000 onto that operating expense. So it's a true cash requirement. What does it cost to be open? And let's say that we do that math and it's 50,000 per month for break even. At a minimum, my recommendation should be 1 times break even. And that's the floor, in my opinion. Our client average it bounces between 1.8 and 2.0. So most dentists out there, if they have a practice that has a 50K break even point, most everybody's keeping 90 to 100K in that operating bank account, and that's the aggregate total of all your business bank accounts. So if you have two, it would be 100K. It would be the total of both of those accounts. That's really useful, in my opinion, for a couple reasons. You can just pay those bills as they come in, but it also helps formulate as owners how you take a profit distribution. Because once you identify your cash reserve, what you're comfortable with at the end of every month, and monthly would be my recommendation, you can look and see how much money's in the business. If hey, at 100K, I can sleep at night, I got plenty of money, I can pay bills, I got a little rainy day fund kind of built in there. And at the end of the month, you see there's 120K in the operating accounts. Well, then I can take a 20,000 distribution
Right.
and not leave the practice short of cash. So that's how I think about that. That's a place to start with some math. Ultimately, it does come down to the client's comfort zone. We have some clients where they keep a ton of money in the account because for whatever reason, they're just more comfortable.
Yep.
We have other clients where, gosh, they run it on the razor edge. I
Yeah.
don't know how they do that. I
Right.
would hate that, but there's no wrong answer, right? You
Okay.
can do it however you like.
If your client asks you your opinion, like, how much is too much of a multiple?
So I would say if you get north of 3 times, you really need to start taking that money out. And here's why. Uh, all private dental practices are pass-through entities with very few exceptions, that might actually be a C corp, which is not what they should be. So it's a pass-through entity. If it's successful single owner practice, it's likely an S corp. You owe income tax on the profit the practice realizes, regardless whether you take it home or not. So you may as well take that home. It's not saving you any money on tax leaving it in the business. So go ahead and take that money home. There's a higher and better use for those funds rather than just sitting in a business checking account. You could take it, invest it, put it away for retirement, give it to your financial plan or whatever you want to do with that money. If you allow and that cash to build over time. And I'll give you a real world example. We have had clients where the cash builds, it's over $1 million in their operating account. And let's say you let that build over the years, and then in a later year you say, you know what, we're buying our dream house. I'm going to take an $800,000 distribution. So you take an 800K distribution in a tax year where that distribution then exceeds what's called your basis. It creates a tax problem. So keep up on your distributions, so that you don't let that cash build. And in my opinion, the real reason to do that is that you've earned that money. That's why we own businesses, is so that you can take those distributions, you can write yourself those nice checks, and then put that money to work for you. Don't have it just sit in the operating account.
Would you say quarterly distributions are common?
You can totally do it quarterly. I think you could also comfortably do it monthly. On the other side of the spectrum, another real world example, conversation I've had with a doctor where he's actually doing it daily, right? Just every
Okay.
day he's going and grabbing 2-3 grand out of his operating
Okay.
account. Don't do that. And what that will lead to, and what that led to with this client, is his practice is out of money.
Right.
And if I recall correctly, it's a big office. Like his break even's like 70K or something like that.
Mhm.
On average, he has $6,000 or $7,000 in his operating account.
Yeah.
Okay,
Yeah.
that's not where you want to be. So yeah, daily, weekly, no. Monthly, I think is good. Quarterly is about as far as I would stretch that out before taking a distribution.
Great. Well, as we wrap up, I wanted to ask you, as you have clients come your way and maybe switch over to you from other CPA firms, What are you hearing as feedback as maybe why they're making the switch? And in your opinion, what can our clients expect from their CPA?
So I think, and I visited with a lot of doctors over the years, looking at making changes. I think a big reason I hear often is responsiveness.
Sure.
So a lot of accountants, if they're a sole proprietor, just kind of like a single doctor dental office, right? You could have a single CPA accounting office. If they do a reasonably good job, it's going to grow, and if it scales beyond what they can really manage, that's when it starts taking 1, 2, even 3 weeks to hear back on an email, just because they go underwater, and so they can feel that. Look, I have a question, but it takes 2 to 3 weeks to hear back. That's a very common complaint I hear from doctors looking for a change. They also can get dissatisfied if there are like big surprises with the tax return, and it's a challenge. These are pass through entities, so as you earn profit during the year, there's not a granular calculation to say, okay, my profit today, as of like May 7th, I've had earned this much profit. I owe exactly this much tax on this much profit. That's not how it works. With the pass-through business, you owe income tax on total annual household income as of December 31, and that's unknown. That not only tells us what the taxable income is, but also tells us your tax bracket, right? So because your tax rate is also variable, just like income. So tax planning's difficult. You have to put the work in. If we kind of go back to my example, you got the single person shop, and they tend to do more just tax return preparation. They don't look ahead. And what can happen then as you get into the spring, they put the tax return together and say, oh, wow, you had a nice year. You made all this money. You need to write a check to the IRS for $80,000 next week. And the doctor says, whoa, that's a lot. I sure would have liked to have maybe had a heads up on this like 6 months ago. That's a complaint we hear often. And I'd say those are the two big ones. We can, talk about just some reasonable expectations on tax liability. When somebody becomes a high earner, and just a trajectory to talk about here. Say somebody's made an associate, and they're making good money as an associate, but then they get into ownership. They really invest in their not only, they obviously have really good clinical skills, but they invest in those business leader skills. They put it all together, have a very successful business. They'll be making 3, 4 times what they made as an associate. And so now they're a high earner. Well, if your income goes up 3 times, what also comes up about 3 times? Yeah, your tax liability. And there's a lot that you can do to lower that tax liability as a business owner, but it's not going to erase that tax liability. If someone's making $800,000 per year, there's not a 10% effective tax rate.
Right.
And so part of it is just having realistic expectations. And when we have clients that have been with us for years, or maybe they've been with another CPA for years and then they join us. Once you've spent a lot of time as a high earner, that really settles in. But for newer dentists who are really making a lot of money for the first time, that can be a shock, right, and can lead to some dissatisfaction. So we put a lot of effort in to address all three of those. So we do same day email response. Nobody's going to wait 2 to 3 weeks, and we have a lot of technology to do that, to really stay on top of that. And I can actually measure that. We're usually responding in about 3 hours, but I just say, look, it's same day, just to be realistic. Sometimes you have high busy times. When it comes to keeping doctors informed of their tax liability, that there's no other way around it other than just periodically during the year, ideally quarterly. You just got to tear it apart. Right? You got to say, where are we? Where are we headed? What's the math telling us? Where's it going to end up? Keep in mind this is subject to change based on what might happen in the fall, just to provide some realistic estimates on what needs to be paid in during the year so that we avoid those year-end surprises. And then in regards to the tax liability, it's not only education on how that tax liability is calculated, but it's also empowering that doctor with the available tax strategies, and there's a lot of them that small business owners that have pass-through entities, there's a lot of opportunities to lower that tax bill. So we give those to the client. We serve it up in a checklist format to let's not lose any sleep at night. Let's not worry about, you don't know what you don't know. Let's execute these strategies. And it's a team approach. It's teamwork. We prepare, deliver, and present the strategies, and then the doctor must execute those, right? It's not something that can be totally outsourced. So that's probably the very long answer to your question, but I think those are some common pain points in the industry.
Well, if anyone's listening to this and feeling like they need to make a change, they want to work with a CPA firm that kind of thinks this way that you and I are discussing, what's the best way for them to reach out?
A couple different ways. If they want to just check us out to see what our reports look like and learn more about how we do things, they can certainly go to our website. That's eagdentaladvisors.com. Plenty of places on that website to make an appointment. My business partner, my longtime business partner, Courtney, and myself still do the initial consultations personally. So you'd be chatting with us. If you just want to shoot me an email, again, we handle all these personally. They can send me an email. If you link to that in the podcast, you could click that. But it's real simple. Morgan.Hamon, Hamon at EisnerAmper.com. And you'd be hearing from me to set up a time to visit, learn more about your practice, and talk about whether it may be a good fit.
Thank you so much, Morgan, for joining us today. I personally learned a lot. I know our listeners did too. So thanks for coming on.
It was my pleasure. Thank you for having me.
Thanks so much. We'll see you all next time on the Shared Practices Podcast.
Resonate.